Welcome to Many Millions, where we focus on the many reps and the million moments it takes to build a trading career.
Welcome back, traders. This is part 3 of a 4-part series on my entire strategy. So in part 1, we learned the why right behind it, used the analogy of the jets and the different time frames lining up to kind of signal the whole thing. In part 2, you got my exact checklist when to enter a trade. And now we answer the most important question. What do you do after you click that buy or sell button? So the solution is managing risk. I always say manage risk first, profit second. So I'll give you a simple framework that I use to hold my trade, to know when to get out of the trade, more importantly, when to set your stop loss, all of that. So let's get into it. You can see here I have a session open from earlier this week. And we're just going to use it as a guide for a trading example because I feel like that's the easiest way to show you how to manage a trade. So let's see if we can find ourselves an A setup, because that's what I should base everything off of. That's what I like to base everything off of anyway. We had a strong open here. You can see we've got some range. In fact, I'm going to pause it and just back up so that we're covering the basics like we always do. Basics are what? Look left. So let's check your 15-minute. Obviously, we're back quite a bit here. We'd have to go back a day because we're only an hour into the New York Open there on that Thursday. But what I want to call out here is we are nearing a significant level. See, this all-time high has already been tested. It rejected off of it. And you can go back a ways. I just know it's the all-time high. So there's not really anything referencing way further back left, but enough here that we know it's pushing back up to that level that it opened at and rejected from. Zoom back in here. So we're going to watch this level where our bearish divergence hit. Let's see what we get. I'm going to try to fix the volume here as well so that that's a little bit more visible. Yeah, you can see, I think in one of my other videos, I had it zoomed clear into 50. That's just not the kind of volume I like trading. That means the volume is drying up and you just don't have the momentum. This strategy is all based on momentum. So we're getting up near the top of this range. I know this is just my 1 minute, but we're going to let this play for just a minute longer. I'm going to slow it down here because what I would be expecting is this first B setup signal that it rejected. Then I would hope for a new higher high, and a rejection of that higher high would be, and a break of the 9 EME would be our entry, right? We covered that in the last video, so I'm not going to cover that too much in this one. I've got my bearish divergence. There we go. I've got my entry signal here. Could have gone 1 bar back, but that's okay. I'm just going to show you what it takes to manage this trade, really. So let me get my trading panel up. Typically what I'm trading is 8 to 10 lots, depends on what I'm really looking at as far as the momentum, the price action movement here at the top, but it's above your swing high, obviously, right? Or your swing low if you're coming off of the bottom. So let's go 10 on this one. And we will go ahead and sell it. Now, in the practice session of TradingView, I don't love this because I can't really set it the same way that I do in my videos that you see. But we're going to go right above this swing high. That's $362 stop loss. I would probably be more like 250 to 200. So actually, I think it'd be more towards the 8 lots in this case. And then I'm going to bring it down here for my take profit down to the low zone. Okay. Now I don't necessarily need to hold it down to here. This is just a reference point. And as long as I get my signals continuing to come to me to stay in, I can stay in. I don't have to exit before this, but I might be able to carry it all the way down to the bottom. So we'll call this a pretty good 3-to-1. It's a little bit more than that, right? But maybe I'll bring this up to 350, so that looks more like a 4-to-1, I guess, in that scenario. So let's go ahead and play this through. Let's see how this goes. Typically, again, these do work in your favor almost immediately. What I'm looking for, I'm going to slow this down because we're all about watching the signals. That's what I do. There is a very dynamic way that I manage my trades. And number one is that I'm watching the volume. If you see the volume continuing to increase and in your direction, like it is right now, there is absolutely no reason to exit that trade. The other thing that I watch for is my stochastics. Now, this 9 stochastic is getting into oversold conditions. So is this one, actually well into oversold, right? But my bottom 2 stochastics are actually very, very overbought still. This one's coming down into a more medium range, but the 5-minute is nowhere near. So as this starts to roll over on the 5-minute, you'll typically see these, if they're really good bouncing off the range trades and run all the way through the bottom of the range, you'll be watching this 5-minute stochastic all the way through till it hits the bottom. That is your entry, or that's your signal then to get out. Is if that is reached at the bottom of this level, I'm never holding really past that. The other rule, if you remember, that we exit a trade is it breaks that 9 EMA. So let's continue to watch our volume. Speed this up just a little bit more. We're still getting more volume. I'm getting a little bit of a rollover here. Volume, little tick back, but again, it hasn't broken that 9 EMA. I'm okay. It seems like it's rejecting, and you'll see this a lot where you get a 1, 2, maybe even a 3 candle pullback, but it respects the 9 EMA the whole time. Now my 5-minute stochastic is just barely coming into the range. We're going to keep holding here. As you guys know, my indicator also has, especially with these A+ setups, it'll do it on the B setup as well. You can see that it's got this orange X here. It actually tells me, based on the 1.5 ATR is what that is based on, and tells you your exit. So I'm still watching here because volume's not really running against me. I mean, it kind of flattened out a little bit, but it never really pulled against me. And there's my exit signal from my indicator that you saw flash up there. We are bouncing off of this VWAP here. I would expect that to be a tested level. So we're probably okay for another second here. We've got a little bit of range left on that 5-minute stochastic. I'm going to let it run just a second longer just to see if I get that exit signal from my, okay, and now I've got a break of the 9 EMA. So I have my exit signal pop up from my indicator. I'm now breaking that 9 EMA. I'm going to go ahead and close my trade. So again, you're watching the volume, and now we have this on-ramp, right? That's my ramp up that I call it, that says it could be wanting to run the other direction, and we have our stochastics now starting to turn against us. These are the same stochastics we use to get into that trade. So the moment you see them reversing like this, clear indicator that you want to get out of that trade. You saw some pop up here a little bit, but the volume didn't really indicate that it was this much of a momentum shift. That hook combined with that volume ramp up is enough for me. So those are my kind of dynamic exit plan rules. Standard trade, again, if I'm taking the B setups like this back here, this bullish that we had, I would take typically more like a 1 to 3 candles up. And I know that's a micro scalp. That's fine by me. But let's look at where we ended up on the stochastics. I would be exiting right here at the top of this 9 stochastic if it's a B setup. That's just what I would do. Now, volume may say otherwise. Volume may continue increasing. but I know that's a lower probability setup. I'd rather secure some profits and not have it run against me. So in the case of an A setup, I'm willing to hold a little bit longer down to the bottom of the range. In fact, I'm willing to bet this may continue to go down all the way through that 5 minute. But as soon as it breaks the 9 EMA, there's no reason to let that turn against you. So I take my profits and I go. Just keep in mind things that just make your mind more at ease when you're taking these trades. $500 trades in a week is $1,500. That's $78,000 in a year. If you were to now, obviously, you're not going to get a 100% hit rate, but I think we chase too much of the profits and we don't focus on the risk management. If you want to be in this game long term, you have to protect your capital. And there's nothing more stress inducing than not quite booked capital, meaning you haven't closed that trade. You don't have those profits yet. You have to protect that mental aspect, because it can really ruin you as far as your emotions getting in the way and you trying to chase and now revenge trade. So that's why I just like to follow these rules very simply and have a system that tells me when to exit. Hope you enjoyed this. I'll see you in the next part, and we'll continue down this path of all of piecing it all together, really, is what it's going to be. Setting the structural stop loss, and we're going to have the complete system. Now you're going to put it all together and walk through several real trades, start to finish. I know we used one here, but I'll be applying every rule you've learned in the series overall, individually, now all rolled into one.